everyone doing today? Let's do an end of the day defiance report and see how all these funds ended up. Let's start over here on triple QY. That's usually where we start. We'll look at the charts first. Here's the profit box. You can see we had a hell of a rally back and almost made it back inside the profit box where we would not incur loss. But we were unable to get all the way back inside, unfortunately. Now, SPX, which is JEPY, was quite a bit weaker. It was the weakest one of the day. Then Russell, which is IWMY, was also pretty weak today. Then we have USO, which is USOY. Now, oil actually rallied today, midday, and then sold off towards the end of the day. But these guys are still, they have options sold for tomorrow. And those options are at max profit right now, or the strategy's a max profit. All right. Because they're above the top line, right? Top line's where max profit is. They sold some other options into next week, but we'll talk about those tomorrow. All right, so now let's look at TLT. This is Tress. Now, Tress lives in the Valley of Death, you guys know about, and unfortunately, they're going to pull the plug on Tress. It looks like Tress is R.I.P. Tress is not going to trade anymore after I think the 26th of this month. I'm trying to pull up the, all right, yeah, Title Investments. The fund's sub-advisor informed the Board of Trustees that the fund could not conduct its business and operations in an economical, efficient manner over the long term due to the fund's inability to track sufficient investment assets to maintain competitive operating structure, and recommended the fund's closure and liquidation to the board. Anyway, the board accepted the recommendations, and this is going to be closed and liquidated. If you have shares, they're going to give you your money back. I looked, let's get a chart out of Tress. All right, we're going to look at it two different ways. We're going to look at it with dividends factored in and without dividends factored in. So we'll turn off adjust data for dividends. We'll pretend like dividends never happened. So in a dividends never happen type environment, this thing opened on its first day around 20 and is trading just under 17. So a loss, call it $3. What is that? That's 15%. 15. So a loss 15% in NAV. Okay. Now let's turn it back. Let's turn it back onward, adjust data for dividends, and see how much money, see how bad the investment did. Not the NAV. The NAV's not the investment. Okay. It did about $1 better, and the dollar is due to the dividends. It probably received about $1 dividends. But with dividends adjusted, it dropped effectively from 19 to 17. So $2 on, 10% basically. 10% with dividends, because it got about 5% worth of dividends that offset. So it didn't really lose 15% like you would have thought. It lost about 10% after you factor in the dividends. Anyway, sorry for anyone that bought that, but Jay's record's still pretty good. He's making a lot of money for a lot of folks. But yeah, this strategy didn't work out. Shut it down. Let's start another one and go on down the road, right? Okay, so now let's look at the yield max funds. Let's start with old Tesla. All right, we'll make this full screen. Now we're on the daily chart. I kind of like the daily chart. Anyway, the daily chart tells us what we need to know right here. For the past 7, 8 days, we're grinding sideways. That's good news for people that own Tesla and crash together. But if you own Crash separately, you still have some room for capital appreciation tomorrow. Or Tesla, you still have room for capital appreciation. If you own Crash by itself, you also still have room for capital appreciation on Crash. All right, so NVIDIA pulling back lately, but today it rallied a little bit. Plenty of room for capital appreciation. They aren't anywhere close to being tapped. Let's check out AMD. AMD's been pulling back lately. Boy, these strikes they sold are way the heck up there, but they've just pulled straight back this week. All right, so let's look over here at MicroStrategies, MSTR. These guys are stronger, and these guys have a blown out strike. These guys have blown out that strike right there. 1455, I believe, is what it is. And let's look at Coinbase, which is, of course, we're looking at them for the sake of Coney. They look kind of like MicroStrategies, but their price is coming back to the strike. They haven't rolled yet, and they might get away with it. Look how long we've been following the covered call action on this fund. I guess back since March. Okay, now I do want to say Coinbase has an inverse fund called Fiat. Those are the inverse covered put boxes or profit boxes. All right, so let's see what else we have on the agenda. All right, R.I.P. Trust, we talked about that. Oh yeah, I made a video, and I was debunking a rumor. There's a rumor that the Trump shooter, or people that knew the Trump shooter or whatever, loaded up on about 120,000 puts in DJT before the shooting took place. So that's not true. So anyway, I made a video and explained how we know about it, or why it's not true and why it's obviously not true. Let's see. Also, I made another video. I made two political videos today. I made a video on there's actually a betting market that has options. They're called binary options, and they're event-based binary options that they have them on the election. The way they usually work is these contracts trade between $0 and $100. They're binary options. They're cash settled. They cash settle at 100 if whatever the binary event is happens. So like if right now, let me show you guys how this works. Okay, so if you thought Donald Trump was going to win, you could buy yes. It would cost you $63 today, and if he won, you would win $100. It would cash settle at 100. Okay, Kamala, it would cost you $27 today, but it would be worth $100 if she won. Joe, it could cost you $8, but it'd be worth $100. So that's more than a 10 bagger. That's like a 12 bagger on Joe. You just get about a 3 bagger on Kamala. Newsom, Kennedy. But in any event, this is how binary options work. You can see Trump's odds were the highest right after the debate. Right around the time of the debate is when they peaked so far. Biden's, on the other hand, Biden's peaked on the day of the debate. I think the 16th was the debate, 28 cents. Since then, Biden's fallen from 28 to 18 cents. Trump, during the same time frame, has gone from 67 cents to 63 cents. Now, it could be because people are thinking maybe somebody else will, other than Biden. People are betting on people other than Biden or Trump, I guess, would explain that. And you can see Harris has gone from 10 cents to 27 cents. But that's binary options. Binary options are fun for this type of stuff. I made a video on how to play binary options, and it's almost kind of like horse racing. And I made a long shot ticket out for everyone. But what I said to do, I said to put money on all the long shots. I said put money on Newsom, Kennedy, earlier, Gretchen Whitmer was up there. I would scatter money around on all the Democrats. I would get Newsom, Pete, Mayor Pete, and Kennedy. I would get those three people. So that's 9, 10, 11. You could get them for 12 cents. Okay. You would win 8 times your money back if one of them won. I don't think one of them's going to win. I don't support any of them necessarily. I don't want to talk politics on here, but I just think for the money, it's a good bet, because what's going to happen is Biden's going to announce a press conference, and he's going to announce that that he quits. When he does, Newsom's price is going to go from 7 to probably 15. Mayor Pete's price is going to go from 2 to a nickel. Kennedy's price will go from 2 to a nickel or something. So I'm just saying, money wise, I think that you could, if you wanted to bet a long shot, now's the time to do it, before a long shot Democrat, before Joe pulls out. If you want to bet a long shot Republican, and I'm not saying to do that, but now would be a perfect time to do that, because you can get any of them for $1, but don't even waste your money on that. I would get these 3 long shot Democrats and spend a couple $100, cost you a couple $100. But if one of them wins, it's worth, you could cash a $1,600 ticket, right? So on 200. Well, that's not right. That's not right. Well, it depends on how much you bet, but you could cash a pretty nice sized ticket if one of them wins. If let's just say you bet $7, $2, and $2. So what was that? 9, 10, 11, 12. So $12. So if you do that 10 times, it'd be 120. So then you stand to win $2,000. That's what I was trying to say. Bet 120, possibly win $2,000. I just like the math of the way that one works out. I just like longer shot picks. Anyway, I made a video on that as well. Go watch that if you want to. All right. Meme and earnings trades. Okay, let's look at this. We're going to go to option strat. Now, GameStop pulled back a little bit today. So if any of you guys followed me in this trade, hopefully you cashed out yesterday, because it was worth a little bit more money yesterday. It was trading up. It was trading around here. GameStop's price moved to the left and moved down. And anyway, you can see this trade, which is just $62 worth of risk. Right now could be taken off for about more than a 50% gain. All right, so that's the GameStop meme trade. That expires tomorrow. So tomorrow that will have to come off. And here's another GameStop. Here's a different alternative GameStop one that's working out a little better. This one had about $100 worth of risk, and this one is worth about $80 profit right now. It's worth about $180. That's not a bad meme trade. It's not very much money. You'd have to do it 5 or 10 times, these double diagonals are small trades. Then my big trade, this $1 million baby. This is if you have $1 million account and you want to hedge it all the way through the end of the year. This option trade gives you a get out of jail free card through the end of the year. Whatever the market drops, these options will offset it. So you won't get a margin call. You won't see your account balance go down. Your account balance will stay steady. Even if the market drops 40%, your account balance will stay steady. Now, on New Year's Eve, this option position will expire, and at that point, you have to sell it. But you could just keep it until then, and it'll perfectly offset any loss you have. The other thing is, if the market keeps going up, this trade costs about 3.5% of your portfolio. But if the market goes up another 10% the rest of the year, you're out 3.5% on this trade, but but you aren't capped. You aren't selling anything to buy these options. This is just a put position. So you would only make additional 6.5% of capital appreciation on your portfolio after you account for the 3.5% that you wasted on options. Now, you didn't know it was wasted at the time, of course, but in theory, if the market doesn't crash and maybe keeps going up and you do this, you can still have more upside as long as it goes up more than 3.5%. So anyway, if you want more information on these kinds of trades, they're kind of complicated. Hit me up in the messages. All right. So I have several different trades on those hedges, but the main one we look at is this $1 million baby, and it's up $10,000 right now. I mean, it just came on like a week ago. All it is 2 options. It's 4 puts by 3 puts for December. Well, okay. This actually is a little bit of a different one. On this $40-20 million baby September edition, I broke the hedge up into 2 parts. So I made an option position that expires September 31st. So then after that, this one expires, this strategy will put on another option position to cover the rest of the year. But in any event, that trade is up $10,000 right now. Now, to be fair, the market's down about 1%. And so if you have $1 million account and the market's down 1%, your account's down about $10,000. Of course, that's the idea. That's what this trade's designed to do, right? It's designed to hedge $1 million account. So these other ones that are down less, they're for smaller accounts. So I was trying to show how you could do it on any size account. All right. We also have a Tesla pre-earnings play. Now, these options don't expire Friday. They expire next week. This is a double diagonal that expires next week. Next week's are Tesla's earnings. And this trade right here had about $700 risk and hoping to make $300 or $400. Hoping to take it off right before Tesla announces earnings. It depends on what the price of Tesla does and if volatility comes up anymore or goes down. Anyway, we'll keep an eye on this one as well. All right, guys. Well, I appreciate you being here, and you have a very nice evening. All right. I will be back tomorrow. Thank you very much.